Hello, ladies and gentlemen. Welcome back to another Wednesday night live stream. Great to see you all here. I've decided I'm going to do these live streams probably every other week rather than every week. So if I'm not about next week, I'll be about the following week as well. All right, guys. So thank you so much if you are watching us live. If you are watching on the replay, please feel free to give it a thumbs up and to let us know where you're watching this from, where in the UK or in the world you're watching this, because we do have a few international viewers for some reason. So thank you if you are watching anywhere in the world right now or on the replay. If you can give the stream a thumbs up, that really helps YouTube know that you're getting some value out of this information, this live stream, and of course myself. So we've got quite a few new subscribers over the last few weeks, so I just thought I'd go over a little bit about who I am and why I do this channel. So I'm Lee Everett. I've been an estate agent in North Essex for, I think it's 21 years now. So ever since leaving sixth form college after a few weeks, I got into selling houses. So I've done this all my adult life as I'm approaching my later 30s now. So, but what I've noticed, especially over the last 10 years, is there really seems to be a lack of support and help for first-time buyers. Now, the estate agents, the sellers, they have the estate agents helping them, holding their hand, advising and guiding them. But there really isn't anyone, unless you're going to pay for a buying agent, until obviously this channel, there's a few other YouTube channels as well that really help first-time buyers actually buy their first home and help navigate you through the whole journey, the maze that is buying a house, from viewing, offer accepted, the conveyancing process, and all the other things like what bills to set up and stuff like that. So this channel is really for you guys who have either started your property journey or haven't started, looking for advice, and to come together with other first-time buyers, other people looking to buy a property, in the comment section, in the chat, to really sort of get to know each other and help each other out. And that's what the main goal of this channel is. In the last 2.5 years, to go from 0 subscribers making really awful videos to sort of 2,400 in a couple of years, I'm really proud of how far the channel's come and how many people, not just I've helped, but you guys in the chat and in the comments as well. There's always some nice conversations and helping each other out as well. So well done to you as well, and thank you for joining me on this journey. So that's a bit about me and why I do this. No ulterior motive. I don't care what happens with house prices. I've sold houses in the 2007-2008 recession, the dip before Brexit, and now as well. So yeah, there's no ulterior motive here, but to help you on your house buying journey. So if that's something you want to come along with a ride for with me, then please hit subscribe. That'd be great. And if you could like the streams, that'd be fantastic. But today's live stream is going to be primarily about Halifax and their latest house price report, which has, it took a few people by shock, especially us in the office. And but I'm sure a couple of other YouTubers have already done videos and live streams on the Halifax report and given their views and analysis on it. But I like to, when I can, give my opinion on it and hear what you guys have to say as well. So I'm going to share the screen now. And I will say hello to people. With Alex, who was here very, very early. So thank you so much, Alex, for joining me yet again, my friend. And it says Happy International Women's Day, ladies. So happy International Women's Day. I hope you've had a great one. AT, welcome to the stream. And Mick Mahan, welcome. Thank you so much for joining us. Really, really appreciating having all you along for the live stream. Oh, and Ayla, sorry. How are you? Good evening. And yes, Alex, I'm feeling a lot better. Thank you. A lot better. I've got rid of the conjunctivitis and the cold, which the kids decided to share with me and my wife. So let's get on to the report. And thank you for whoever mentioned in last week's stream. But if I move the camera to this side of the screen, it looks like I'm looking at the report. So thank you very much for that idea. Right. So this report from Halifax is quite interesting. I wasn't expecting this. I think a lot of market commentators weren't expecting the actual house prices have, that's the wrong one. I've shared the wrong bloody one, haven't I? Hang on a second, guys. Do you know what? I was ahead of schedule today. I was ahead of schedule, and that has really put me, yeah. What have I done there? Hang on a second. I got cocky. Where are we? Let's share this now, shall we? There we go. February. That's a bit better, isn't it? That's a bit better. I was looking at the figures thinking, it's gone down 1.5%. I'm sure it went up. But yeah, here we are. This is February 2023's, which goes on January's house price index and this is just for Halifax and the Lloyds Banking Group, their figures for their mortgage transactions over the last sort of month as well. So it's not a whole of market what's going on. It's basically what Halifax have access to, their mortgage figures, and they've reported that house prices, according to them and their mortgages that they were processing, went up by 1.1%. So yeah, it's up to £285,476. Now we were a lot higher than that, weren't we? We were a lot higher, about £9,000-10,000 more back in August, which I think we all would agree that is the peak. That is the peak of the market. And we've had those successive falls in the mortgage indices figures in their monthly price indexes. We had a levelling off last month with Halifax. So we had those 3-4 months of going down. Then last month we had like a flat, I think it was 0.01% decrease in price, about £30 on the average home. And now we are seeing a monthly change of an increase of 1.1%. Still down 2.5% on the quarter. We're still down quarter on quarter, which we had some massive sort of drops leading up to the end of the year after Liz Truss's budget and Kwasi Kwarteng and their great ideas for us. But yeah, so you see from the report here, monthly change 1.1 from 0.2 in January and the minus 1.3 in December. So we can see that the rate, according to Halifax's figures, has started to, it was coming down, leveled off for a month, and has gone back up. Now, I don't think for 1 minute that this is the sign of house prices increasing or the end of any correction. I'm going to use the word correction rather than crash, because I'm not here to scare people or to sort of get people's hopes up, because I don't know what's going to happen and nobody knows what's going to happen. This is all opinions and yeah, every property crash is different. There's different mechanics and reasons why the property market may or might not crash or correct. But yeah, so I'm going to say correction until maybe in 6 months, a year's time. If it does happen, if the market does bottom out, then I will start calling it a crash. But at the moment, we're seeing a correction. We're seeing these falls and then a stagnant, especially with Halifax. It'd be interesting to see what Nationwide say when their report comes out in the next week or so. But yeah, but what I would say is with Halifax and what they're saying, I'm experiencing something pretty good for what we were expecting for this year so far. I've been chatting to a few estate agents in my town where they've been telling us what sort of deals they're doing, how much they're tying properties at, how many people are looking. And there doesn't seem to be this scared to buy attitude, which I was really expecting to come up against this year. So I'm not sure if that's just where I am. There's still lots of reductions happening in my town. There was 3 pages of either new properties or reductions in the last 24 hours in my town and 3 miles around. So there still is definitely people reducing their houses, but I'm still taking new applicants on my register every day. And a large proportion of them are getting a mortgage, whether they're taking out a new mortgage to buy something bigger, porting, what have you. So even with the increase in mortgage rates we've had over the last sort of 3, 4, 5 months, it really, where I am in North Essex, hasn't really done too much to the market. And in January and February, as I said in my last live stream a couple of weeks ago, our sales are pretty level with what we did in 2022 before interest rates started to go up. March last year, we had a stonking March. It was fantastic. So it'd be interesting to see whether we have the same sort of March or whether we start noticing a difference. But it's certainly not as bad that I'm experiencing with the housing market that some papers, other news articles and journalists, etc., are experiencing. But let's read a little bit into what they have to say. That's enough of me rabbit on about what I think. Let's listen to Kim Kennard, our friend Kim Kennard. The average house price in February was £285,476, 2.1% up on this time last year, and has been stable over the last 3 months. When comparing to January, there was a 1.1% increase in house prices through the month of February, although overall prices are flat compared to 3 months ago. So we had that December drop, the January sort of leveling off, and then this month's increase has sort of leveled off somewhat. Recent reductions in mortgage rates, improving consumer confidence. Now, I am noticing that, as I just said, people don't seem to be waiting in their droves as much now as what they were later part of last year. And continuing resilience in the labour market are arguably helping to stabilise prices following the fall seen in November and December. Still, with the cost of the home down on a quarterly basis, the underlying activity continues to indicate general downward trend. So, yeah, I still think by the end of the year, we'll be looking at a 10% decrease in prices on a 12 to 18 month, may end of this year, some point next year. That's just my prediction. And I'd say it's just a gut feeling I've got. That's all it is. And you can have your opinion as well, what you think is going to happen. I know a few of you I've had a few people email me saying I think house prices are going to go up this year. I don't quite see that, but I respect your opinion. And some people saying, obviously watching other YouTube channels and media outlets, hoping and predicting for a much larger drop. And I say, one of us could be right. It really is just picking a number and hoping. There's no science to it. There is no science. It's all predictions, and predictions is just a good guess, or best guess you can have. So yeah, I still think there is going to be more pressure coming down on the housing market, with prices still looking to come down a bit more from where they're at the moment. We might see these ups and downs. Now, when the reports that came out that house prices are coming down, people were jumping on it saying, yes, I told you house prices are coming down. They're coming down. I was right. But as soon as there's a slight increase, they say, yep, don't look at that. Do you know what I mean? People can use data to spin however they want. But I'm just telling you what I'm experiencing selling houses in my town. And I'm the biggest estate agent in my town, my area. I'd probably even say my district, in terms of the council that our local council does, probably the biggest agent there. So, and we're noticing it's not too bad at all. In cash terms, house prices are down around £8,500 on August peak, but remain almost £9,000 above the average price seen at the start of 2022. This is where I think if we can get that £9,000 off what they were at the peak of 2022, so the start of 2022, and maybe have a little bit more off to bring it in line with what prices were doing before COVID sparked this huge increase in house prices, then I think we may start getting somewhere with a more stable and active property market. Unless the banks start doing something crazy, or the Bank of England start letting banks allow more of their mortgages to be 5.5 times income, then or the government start doing another help to buy, which will stimulate other bits and pieces. But yeah, it'd be interesting to see what happens in the budget next week. Is it next week or the week after? To see if the government will do anything to help the property market. They tend to do something, don't they? They tend to do something. Where are we? With average house prices remaining high, high housing affordability will continue to feel the challenging for many buyers. So yeah, Yeah. National regional house prices. Look, I've linked to the report in the description. So if you do want to have a read through it, where you're looking in terms of what areas, how it affects you, then definitely have a little look at that. Property types. By property type, prices of flats are now into negative territory over the last 12 months, minus 0.3 annual growth, while prices for terrace properties have broadly stagnated, plus 0.3%. For detached properties, these have increased by just 1.5% on the year, the lowest rise since the end of 2019. And it's these detached properties which really shot up in price. Everybody wanted to get out of cities, out of flats and mid-terrace houses and get into bigger spaces, detached places in the middle of nowhere. So we notice a lot of detached houses going up in price quite steeply, and they're the ones we're going to start seeing reducing down in price. And the amount they're reducing in price, monetary wise, will be a huge amount. Maybe not percentage wise, but in terms of money, if you've got 5, 6, 700,000 pound houses being reduced by 10%, 70 grand, 60 grand, they're huge chunks of money. So you're going to start seeing a lot of those more expensive properties reducing, which may not help you if you can't afford that, which a lot of people with the interest rates are probably in that bracket. Annual price inflation remains strong for new houses, 6.6%. A 4-month high, than for existing properties at 1.1%, unchanged at the lowest in nearly a decade. And this bit here just goes to show that transactions in January were 96,500, down by 2.6% in December, which you tend to get a lot of completions in December or the run up to December because people want to complete before Christmas. January, my pay in January is generally rubbish because all the completions happen in December and very few people want to move the first couple of weeks after Christmas and the New Year. So that doesn't surprise me, but it's still a hell of a lot down, down 27% on the year before. So thank you so much for listening to that. Let's get into a bit more of what you guys are having to say. Ida, is it me or is the housing market starting to pick up again? I have been, as I just said, cautiously optimistic in how this year has treated my office over the last 8 weeks. It hasn't been as bad as we were predicting or expecting. There are still lots and lots of people looking to buy. And that's not just homeowners looking to buy. It's first-time buyers, non-dependent buyers. I've got investors taking out bridging finance. I've got 3 investors taking out bridging finance this month alone to purchase a property. Right. And that's an expensive form of borrowing, but they want to get this done quick. And they're not buying properties which I would say were below market value or anything like that. They're just investors who have seen a deal they want to go for, they want to get it, and they're going for it as quick as they can. I've got first-time buyers. Do you know what? This month I've got some fantastic first-time buyers using my company to buy houses, and it's really, really good to see. Really good to see. They're just starting out on their property buying journey. They don't know what interest rates were like in the last couple of years. They're fresh to the market now, so they're not comparing what interest rates are like now compared to last year and kicking themselves. Their property journey has started this year because they've managed to save up the deposit and they're still able to buy a house rather than a flat. So there are some really nice stories out there of first-time buyers who are buying. And you know my rules. If it's the place you want to live, you can afford it, you're not overpaying, and you can see yourself there for years and years and years to come, then go ahead and buy. If you can't answer one of those questions as a yes, one of those as a no, then you shouldn't be buying that property. But yeah, I would certainly say that, I wouldn't say it's picking up. I'd say that it's certainly got, or not as quiet as we were expecting. And whereabouts are you? Let me know. So be interesting to see if you're close to me or not. It's me. Evening, Lee. Had your weekly chinky. Cost of living. Nah, not this week. Not this week. Had a McDonald's instead. A little bit cheaper. Yeah. So I also want to talk about the valuation I went on back in January, the property that I valued and I got chucked out of. You'll be happy to know that it is still on the market. It is still on the market. It hasn't reduced yet. So we're now 2 months into that property being on the market at a way inflated price, and the owner hasn't reduced yet. Hasn't reduced. And what's good is around the corner, I'm taking on a property on Saturday. Been on the market with 2 estate agents, close to my actual house actually, so I know the area very well. Went on the market for £450,000. When I saw it go online, I thought it was too much money. After 3 weeks, they reduced it to 425. 3 or 4 weeks later, only 1 viewing from both estate agents. Now, I've gone round there. When did I go around? Saturday. And I went round not expecting to get this property on the market. I can be quite frank and honest, sometimes overly honest or harshly honest. And I picked apart the photos, the details, and the price. That price, when it first went on the market, was way too much. Way too much. I've gone round there and I've valued it at £400,000. So £50,000 less than what they initially got told by these 2 estate agents. The owner even admitted that they thought it was too much money. And the agent advised them, the vendor said, look, okay, but we only need to get X amount of money to be able to sell. The agent advised them to put it on for more so they could take a drop, which I think at the moment is the wrong thing to do. If you're a seller watching this, you need to price properly, okay? Don't worry if somebody comes in offering you low money. You can always say no. But getting people through the front door, and one person in a big family home in a nice part of town, is a clear indication that 2 months of marketing, the price is wrong. And it really wound me up that there are estate agents out there offering bad advice to their vendors, the people that are paying them money or will pay them money if they sell it, and they're giving them crap advice. So don't always listen to the agent that's either charging you the least or giving you the highest price. They're generally doing that because they have no confidence in being able to get you on the market based on their own sales and productivity and actually creating a sale for you. But yeah, this one is coming on the market at the right price, and hopefully we'll get it sold. But yeah, just be aware that a lot of the reductions that I'm certainly seeing in the town are from properties that have been on for way too much. But some owners are listening. If they get somebody in there who tells the truth rather than what they want to hear, which is what I do, and if they listen, they're going to get sold. And I'm going to keep you up to date with that one as well. So I'm going around on Saturday, getting it on the market on the 21st of March, and I'm hoping I can get that sold by the middle of April at the latest, if I can. All right. Whereabouts is this property at? So this one, I deal with North Essex. I'm not going to give away the exact location of this particular property because it's obviously their property, their price, and I don't want to sort of name drop estate agents as well because, I'm not in that sort of game of bad mouthing directly other estate agents. But there are, I'm sure in the town that you are in, Nag. I've got something called me, Nag. Yeah, I'm sure there's just bad estate agents where you are. What do you think about estate agents offering to sell houses for a fixed fee? Tom, I would personally, depending on the level of the fixed fee. Now, my company, we charge 1% of the sale price, providing it meets our minimum fee. So we have a set minimum fee. If 1% of that sale price goes below that, our minimum fee kicks in. So generally our smaller properties like park homes and stuff like that, we'll do for a minimum fee. Anything above a certain figure, what was it? About 200,000. So anything above 200,000, we charge 1%. And the reason why you want an estate agent that's charging you a percentage is because then they're incentivized. This is from a seller's point of view, not a buyer's point of view, by the way, guys. So if you're a seller, you want an estate agent who is actually working to get you as much money as possible because that company is going to benefit the more money they get you. Okay, so that's one of the things which when I'm speaking to sellers and they're trying to hammer me down on my commission, so they want me to do less than 1% or 1% including VAT or anything like that, I sort of say to them, look, I'm paid on a commission. My negotiators in my office are paid on a commission. If there's a house, 2 houses which are on for the same sort of money, one they're getting paid 1% on and one they're getting paid 0.75% on, as a salesperson, what would you try and sell the most? And I think most sellers, when they hear that scenario, they'll go, do you know what? Yeah, that's fair enough. That's fair enough. But I personally would go with an estate agent that charges a percentage of the price, so they're incentivized to get you the best price possible as a seller. So that's my 2 pence on that, Tom. But there will be times where an agent will do a fixed fee because it goes below their minimum fee terms. Where are we? But rental market is still crazy. One of my properties has only been on the market for a couple of days, 7 viewings already. Yeah, I mean, what we're finding, our lettings department, a lot of landlords are bringing them over to us to sell because the government over the last couple of years have made it more and more difficult to make money, more and more legislation, harder and harder to get tenants out, especially over COVID. So there's a lot of landlords who have gone, do you know what? I've done my 10, 15, 20 years of renting properties. I'm ready to retire. Let's take the money out of the properties, pay off any mortgage if there is any. And what that's doing is leaving a massive gap of properties that tenants need. And while interest rates are higher than what we've been used to over the last 2, 3, 4, 5 years, the return isn't as good as it was. So it's not as attractive as it has been the last couple of years. So it doesn't surprise me that your rental property has 7 viewings and you'll probably have people fighting over it and offering you to pay more if they can afford it, obviously. But yeah, it doesn't surprise me at all. A lot of landlords selling. Hi James, how you doing? Evening Lee, really appreciate the insight you bring. Buying our first property, whizzing through the process, should complete in just over 2 months. Do you think there's a sign of a slowdown? The slowdown's been happening, if you're hoping to move in the next couple of months, it was probably starting when you started buying the property. So I'd imagine you probably bought tail end of last year, James. I could be wrong if it was this year. Let me know. But the property market died of death in October, which was generally one of our busiest months. November and December were difficult, but this year there are people buying again. There is people, and you are a prime example of that. Again, I go back to my original sort of quote: if you're gonna see yourself, if you can see yourself living there for a number of years, you're not overpaying for the property. It's in the area you like, and you can afford it, and you're not overpaying, then you'll be very happy in your home. Only time it becomes an issue about property prices is if you need to remortgage or if you need to sell. Now, you could argue that, I know Moving Home with Charlie says that he gets frustrated when people say that because he believes that you should be able to get your money out of your property at any moment. Okay, it's not quite as simple as that. If you want to pull money out of your property, you've got to go through the whole remortgage process. It's not like a bank account, I'm going to take the money out. You've got to go through a remortgage process, and that is then dependent on obviously what's going on with house prices and interest rates, whether you can afford to do that or not. So yeah, I personally agree. If you're going to stay in the property, the only time house prices matter is if you need to remortgage, whether that's renewing a deal or pulling money out, or if you need to move home. But no one can predict the future. You can only make your best guess based on your circumstances now and how you think things are going to play out. But I personally think if you're happy with your purchase, the price you're paying, and you can see yourself living there a long time, James, I wish you all the best in your new home, and make sure you come back and tell us what your first meal is in your new house. The options we get is generally fish and chips or Chinese or pizza. So I'm fish and chips. That was my one. But yeah, congratulations, James, and good luck with your buying process. Need any help along the way, you know where I am. Where are we here? Let's move that up. Dylan, single first-time buyer, had their offer accepted 2 weeks ago on a London flat, ideal location. My advice for potential buyers: 1, if you're able to get comfortable on location, everything is much easier. They do say location. You can change a lot about a property, but you can never change where it is. And that is why places in certain postcodes get more money than others. So if you're happy with the location, I say, as long as you're not overpaying, but that's up to you. You decide how much you want to pay for that property. Only you can decide how much that property is worth to you, not me, not the estate agent, not the seller, only you. And if you've done your research, then you shouldn't be. James Bowl, come on, you Spurs. Yeah, well, I need you to tell me, guys, because I'm not watching the Spurs match to do this. So if you can give me some update on the scores, that would be absolutely fantastic. Absolutely fantastic. Julie, hello, Julie. How are you? Hi, Lee. Great to see you on your channel again. Thank you. Good to see you back. We've moved at long last into our own home after not owning a property since 2010. Congratulations. Cover your ears, Alex. We've got an air horn coming. Bit of a journey. We feel like first-time buyers all over again. Well, 12, 13 years is a long time. It is a long time. I'm sure it was just as stressful this time round as it was over a decade ago. So congratulations, Julie. Really, really happy for you. What was your first meal? Come on. Let me know. Let me know. Let us all know. Dylan's got some more advice. Second piece of advice from me, be super prepared with agreement in principle and proof of funds. I had a written memo at Xmas explaining where every grand of my deposit came from with evidence. Yeah, you should. Dylan, come on the channel, all right? I've asked loads if anybody wants to come on the channel and share their experience. So if somebody would want to join me, then yeah, let me know. We can set it up. Drop me an email, lee@leeeverettproperty.co.uk. And don't forget to like the stream. I've done a video which done pretty well. I think it was just after lockdown finished and the property market was open. A nice seafront property. I remember it quite well, actually, where the best thing you can do if you're offering on a property, no matter what the market is doing, is being prepared. Having your mortgage agreement in principle, proof of deposit, the solicitor you're going to use, your ID, all those things. When you submit your offer via email and verbally first, follow it up with the email with all that proof. Don't worry what your mortgage agreement in principle says. It may say, well, it should say more or the same amount of what you're offering. Doesn't mean that's what you have to pay for the property. The estate agent will not divulge that information, or if they do, it doesn't mean you have to pay that price for that property. But yeah, being prepared, having all your ducks in order before you offer is fundamental to getting your offer accepted. If you haven't got your mortgage agreement in principle or deposit saved up, there's no point even looking at a property until you've got both of those things sorted, so you know how much you can afford. And going on to solicitors, there's a link in the description, and I think I've pinned it on the on the chat. If you want to click on that link, pop in some details, that will generate a quote with a property lawyer, which will give you a £250 discount. So if you want to have a little look at that, do that. The discount will automatically be applied to save yourself 250 quid. If you do want to speak to my mortgage broker as well, lee@leeeverettproperty.co.uk. So James started buying the end of January, should be completed soon. £25,000 under the advertising price. Congratulations. Not a great mortgage rate, but happy to keep things tight for the next 2 years. And James, interest rates did start obviously coming down, excuse me, January sort of time. So hopefully you got a better rate than what would be advertised back in October and September sort of time. In 2 years' time, they should be back down to a better level than what they are now. And hopefully you'd have paid a bit more off your mortgage. And when you come to remortgage, maybe house prices have maybe come up a little bit from now, and you've got a bit more equity in there as well. And your loan to value might be a little bit better to get you that better interest rate. So good luck, my friend. Good luck. Family with 2 kids. So definitely a long-term buy. No, I'm very pleased. I've got 3 kids, and having a roof over your head, which is yours, which you have control over, for me is priceless. The amount of houses I'm going to at the moment, valuing on behalf of landlords with families in there that landlords are now selling, I couldn't imagine if I rented and my landlord told me and my family that I had 2 months to find somewhere else. Yeah, that personally would cause me more anxiety and stress than maybe paying a little bit too much on my interest payments for a few years. But that's me. Everyone's different. A landlord, yeah, it's not worth it taxing the rental income on top of your salary, which 40% if you're a higher taxpayer, and only 20% of your mortgage payments can be taken as tax credit and minimum C rating. But yep, EPCs, that's going to be changing apparently. But if you can prove if you can spend like £2,500, I think it is, and it not get the rating up, then you can apply for an exemption, I believe. And now giving you some congratulations, Julie. Congratulations. Lee, would you ever be interested in investing in a buy-to-let yourself? Yes. Mine and the wife's plan is to have a few properties. At the moment, with 3 kids, it's a little difficult. My wife is starting up a passion of hers, which is her own photography business, which she started this time last year, actually. I just want to say how proud of her I am. Starting doing weddings and engagement shoots and stuff like that. She's doing absolutely fantastic. But I think for us at the moment, it's getting our foundations in place, so we can then start building up a pot for a buy-to-lets and bits and pieces. My wife, she was a letting agent, and now she's an estate agent in another company. So we're both pretty up to date on property and rentals, etc. So we'd make the perfect team in being a buy-to-let investors. But yeah, I want to get her business up and running, so she can leave the estate agency side and then start doing what she loves. That's my plan for her. And hopefully she gets to do it soon. But yeah. So definitely. I don't know enough about stocks. I don't know enough about crypto or anything else like that. I know properties. I know what would rent. I know what's overpriced, what's not overpriced. So for me, putting tens of thousands of pounds into something other than property, for me, would be a massive mistake, because I'm not an expert on anything else but bricks and mortar. But yeah, I certainly would be. Julie's saying thank you to ANAG. And Na's giving some advice. Buy in a limited company. Yes, there are advantages to that, stamp duty being one, and all sorts. But yeah, again, when when we've got some more breathing space with our finances, we'll definitely be looking to get a buy-to-let or two over the next few years. So guys, thank you so much for joining me this week. It's been a pleasure speaking to you all. Thank you so much. If you haven't liked the stream, please give it a like before you leave today. That'd be fantastic. If you are watching on the replay, please let me know where in the country you're watching from. If you do need any help or advice, lee@leeeverettproperty.co.uk, and there's a link to the Halifax report in the description, along with a link for a quote with a solicitor that I recommend. So have a lovely evening, everybody. It's been a great chat, and I'll probably see you in a couple of weeks' time. If I do get a chance to do it next Wednesday, I will, but I'm not going to promise it. Thanks again so much for watching. Love to you all. Stay safe and have a lovely evening. Take care. Bye-bye.